Good day. Welcome to the latest news update on Canary News. In European markets, stocks experienced a decline as traders assessed the monetary policy outlook ahead of speeches by policymakers at the World Economic Forum in Davos this week. The Stoxx Europe 600 index slipped 0.2%, continuing a subdued start to the year after a 13% increase in 2023. Sectors like basic resources and car makers led the decline, especially after Germany's economy avoided a recession but contracted for the first time since the pandemic last year. Germany's 10-year yield rose about 3 basis points as bonds across the euro region fell. MSCI Asia Pacific Share Index climbed for a third session, with stocks advancing in Taiwan following the Democratic Progressive Party's victory in the presidential election. China's CSI 300 index experienced fluctuations amid speculation that officials might lower the required reserve ratio after the People's Bank of China unexpectedly maintained the rate on its one-year policy loans at 2.5%. Investors are closely watching inflation readings in Germany and the UK, along with speeches by various political leaders and officials, including Chinese Premier Li Qiang at the World Economic Forum. A speech by Federal Reserve Governor Christopher Waller will also be closely monitored, especially after last week's attempts by officials to manage expectations regarding a potential rate cut. According to a Bloomberg poll, economists predict that the European Central Bank will lower interest rates 4 times this year, as inflation retreats faster than previously anticipated. However, ECB chief economist Philip Lane tempered expectations of swift easing, stating that cutting rates too early would be self-defeating. Hopes of a quick dovish switch have been regularly undermined by macro data and hawkish semantics from central bank officials. In the U.S., equity index futures were flat due to a public holiday, with a gauge of the dollar gaining momentum. In the commodity market, oil declined amid concerns that airstrikes in the Middle East could disrupt crude flows. In the latest cryptocurrency news, Bitcoin experienced its most prolonged downward trend in approximately a month, as the initial excitement surrounding the introduction of new U.S. exchange-traded funds for the leading digital asset waned. The cryptocurrency fluctuated between gains and losses, trading relatively unchanged. It witnessed a decline for 3 consecutive days through Sunday, marking its lengthiest losing streak since mid-December. Meanwhile, other smaller cryptocurrencies showed a mixed performance, with the second-ranked Ether facing a dip and BNB making advancements. Nearly a dozen ETFs, including offerings from major investment firms such as BlackRock Inc. and Fidelity Investments, commenced trading on January 11th. Bitcoin initially surged to a 2-year high above $49,000 following their launch, but subsequently retreated. Analysts, including Tony Sycamore, a market analyst at IG Australia PT, noted that the recent market movement exhibited characteristics of a buy the rumor, sell the fact reaction, as anticipated by some market observers. Sycamore foresees a potential slide to $38,000 to $40,000 based on chart patterns for Bitcoin. Supporters of Bitcoin's debated role as a store of value argue that the introduction of the first U.S. spot ETFs for the cryptocurrency signals increased investor access. However, skeptics point to the significant cryptocurrency market crash and subsequent bankruptcies in 2022 as reasons for caution, despite a partial market recovery last year. Bloomberg Intelligence's senior ETF analyst, Eric Balchunas, shared on social media platform X that the new U.S. spot funds received a net inflow of $819 million over the initial 2 days of trading. This included $500 million for BlackRock's iShares Bitcoin Trust and $422 million for the Fidelity Wise Origin Bitcoin Fund. In contrast, the $26 billion Grayscale Bitcoin Trust, the largest fund of its kind, experienced $579 million in outflows after transitioning into an ETF last week. The fund, which previously had a closed-ended structure and traded at a discount to its underlying holdings last year, attracted speculation that the discount would narrow. Noel Akison, author of the Crypto is Macro Now newsletter, suggested that profit-taking by speculators, now that the Grayscale Bitcoin Trust's discount has nearly vanished, could be a contributing factor to Bitcoin's recent weakness. Akison highlighted the likelihood of continued strong inflows into the new funds in the short term as funds on the sidelines enter the market, coupled with ongoing marketing efforts. However, she cautioned that this could be offset temporarily by additional outflows as speculative positions are unwound. In other tech news, Apple made a rare move by offering discounts of up to $70 on its latest iPhones in China. This discount, coinciding with a preference for local brands and edicts against foreign devices, could reflect concerns about diminishing demand for Apple's flagship device in the Chinese market. Jeffries warned of a potential 30% drop in 2023 iPhone sales in China after Huawei introduced the Mate 60 series with a domestically produced processor. Apple's Chinese retail partners had historically offered steeper cuts, but this move by Apple itself marks a departure from its pricing strategy in recent years. That is all the time we have for today. Tune in again tomorrow for the latest news. Remember to like the video and subscribe to our channel.